Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Lucky. Barty. How about YouTube? Hey, Ed. Yeah, Steven, how are we doing over there? Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Let's get to it. As you guys know, we had a big trend day yesterday. If you followed the stream, that has been posted. It's available to everybody. It's in the Bookmap YouTube, and also you can just go out in YouTube and just type Tom B Trading or Bookmap Tom B, and you'll find it. It's I think a pretty good one. Covers a lot, and also a narration of the actual trades and the planning. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, and all this is available at no cost. There is a link in the bottom of YouTube if you're interested in visiting Trader Lab. Download the 60 PDFs. There's a library of webinars, and of course the Trader Lab community, which is a community of like-minded traders who come together to leverage their collective experience. And it's based on the business of trading, building careers, understanding what this business is, not the fantasy, but actually just what it is and how you might navigate it and what does it take to potentially create a career path for yourself. So that's what Trader Lab is. You all have an open invitation. So let's talk about today. Today we opened lower inside of yesterday's range, and go grab a pen and piece of paper. I'm going to give you some statistics that might help in the sense of how, when you're laying out a trade plan, how you might overlay market behavior based on statistics. And the business of trading, in my opinion, is a statistically based business. It's not what will happen, it's what might happen. And because the nature of the market and the rotations is random, we can't predict anything. So we're in an uncertain environment, but the more pieces that we can put together that lean our way, in other words, give us a statistical edge, the better the probability, and that's what edge is, that over time we can extract the dollars from the other participants. And of course, everybody has losing trades, losing days. Everybody makes errors because we're human, and that's the nature of our business. So perfection doesn't exist because we're imperfect beings, and also prediction is not part of this business. It is random as far as the outcome of any specific trade or interaction. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab your pen and paper. Let's go over a couple of items, hopefully. Okay, this is, I'm in Central Time Zone, so 8:30 Central's RTH open. But let's look at some statistics. So yesterday we know was what it was. Big day. Happy days are here again. Now, this is the highest volume price in yesterday's RTH. We are opening, or did open, lower inside of yesterday's range, lower referencing below settlement, okay? So here's settlement, and our RTH open is over here. So we're opening lower inside of the range. The high is above us, yesterday's low is below us. So in range, and the possibility exists today to potentially stay inside of yesterday's range because it was outsized. And it doesn't mean, of course, we can't take out yesterday's high. All things are always possible. But when we open inside of the previous day's range and below settle, we have to start looking at levels. Now, these levels are based on the auction, and the auction is really where buyers and sellers come together, and that's what an auction is. And they try to determine fairness. And to find what's fair, they also have to locate what's unfair. Because it's like you go shopping, and I just want to mention this, trading is shopping. Now, the problem we have as shoppers in the trading environment is this shopping takes place in all time frames and fractals. When you go to supermarket, it's pretty much one time frame, right? So here it's happening all over the place in fractals, and think of fractals as Russian dolls. They're inside of each other. So you guys think of time frames, higher time frame, lower time frame, whatever. So they're all inside of each other's, right? So that's kind of what we're dealing with. And the randomness for us, because it's multi-dimensional, from, let's call it the big Russian doll down to the little one, and they're all inside each other, rotating, sometimes opposite each other, sometimes in alignment. That's where our problem comes, I think, among other things. And when I say our problem, I mean our conflict. So how do you sort all that out so you can get in alignment? Do you use the shorter time frames or the microstructure, which is what I do here using order flow, to get in alignment with higher time frame structure? How do you do this? Now, of course, the answer to that is a trade plan that has a statistical edge. So the statistical side of it comes from the auction. So the auction is happening on all different time frames. So what is this? This is the highest volume price. Now, let's translate these things. Why is high volume important? Well, when you go to the store and there's a retail price, and this is all the same. The highest volume price for the product you're purchasing is the price where the sellers are also willing to meet you and do business. And because buyers and sellers agree on a price, high volume takes place. That's called retail. But if the price goes too high, less buyers are going to be willing to pay it. And then if the sellers want to sell their product, the price will eventually come back to a fair price, whatever the buyers and sellers agree on, whatever that is. And then let's say it goes on sale. So we deviate away from the fair price. Well, at some point, if it's on sale and the buyers perceive that this is a great price, after all, that's retail, the sellers will see the consumption of their product, and then they will start raising the price. And if you're a shopper and you think this is a retail price, anytime it's below retail, you're going to still buy it. It's on sale. Now, it's not the best sale when it was lower, but as we're coming back towards it, you may become more aggressive because you still want to save a few pennies or dollars or whatever it is. And then we come back here. So what we know is the market tends to gravitate to high volume, and it tries to locate outside edges. Now, the other part is it does it in all time frames and fractals. So settlements above us, we're opening lower in range. Let me give you these statistics. Now, you have to vet these for yourself. Past performance not indicative of future results, and these statistics do not exist in a vacuum. They are a piece. Getting to the previous close, which is settlement up above, is about a 72% probability. Getting to this price, naked volume point of control, yesterday's highest price is about a 70% probability. Getting to the ETH mid or overnight mid, get over here, is about an 83% probability. Getting to the overnight volume point of control is also about an 83% probability. Where did it go? Whoa, can't find it. Guys, where's the overnight volume point of control? Is it under the overnight mid? For some reason, it's not showing up here. It should be 58.30. I guess it's probably, it's here. So the overnight volume point of control, I'm just going to throw it in here because it's covered up. It's important. So let me just throw it in here. About, what was it, 83% probability? Yeah, 83% probability. And these levels are statistically based, as you can tell. Now, there's another piece. The overnight low or ETH low has about a 66% probability. And there's one more. Oh, more than one more, but let me give you the other one here. The first hour's high, a 69% probability, which is there. So this is what we know. High probability here, high probabilities here, there, here, and then at the top, and possibility to, so out here, come out there, come up here. And after that, all bets are off. Okay? That's before the day starts. So then what we have to try to figure out is, what's the condition of the market? What are we going to do? Well, nobody can predict that. So what we know. Now, let me come back a little bit earlier. I just want to try to get you to the report. This was our report, I believe, or the high before the report. We get our spike. We had sellers here. We got buyers down below. Now, let's come back here. Now, this was also a potential short right here, by the way, but that's neither here nor there. We were talking about this in Trader Lab this morning. And this is called the mean reversion trade. But here's what's important about this. When you look at order flow, and I'm not even in the RTH open yet, what happened here? Right here. So you get this report, everybody, this is like headbanging. Once that's over with, then we come back, and we come back to VWAP at the time, and we have our sellers are here, and we see some icebergs, sellers take over here. So the idea is, if we come back where this absorption was, are we going to rotate down? Let's just look. Right here, this is where the buyers were, and they got run over. Now, this is an aggressive trade. I narrated it in Trader Lab. It's nothing anybody ought to do. I'm just saying is, what we know is sellers were here. What we know is, if we come up and we run out of buyers, then what's happening here? I got my icebergs here. I got my buyers here. Don't forget, I got my buyers there. I had my sellers up here. What do I got up here? Where's my buyers? I got them there. But what's going on here? Nada. Why is this important? My sellers were here. My buyers were here. If my buyers come back where the sellers were on the other side, and the sellers are more aggressive when we come back, it's these guys, in my opinion. Now, I make an assumption. And now, why don't we see a red bubble here? You're asking. Because you think maybe that bubbles mean buy and sell. They don't. They represent delta or aggressors. The limit order book is the passive side. We don't see the limit orders. We only see the behavior. So the concept, and none of this has to be complicated, the concept is, think Pac-Man. If the buyers are consuming the sellers, we go higher. If we go higher and we don't progress, why is that? Because the passive side is consuming the buyers. And if we run out of the buyers, what's going to happen? We're going to go the other way. Now we come back and test. I got my buyers here. I got my passive side there. And we come down and check this overnight volume point of control. This is your retail price. Remember, points of control. So if I come outside, this is called mean reversion. I'm reverting to the mean, but I'm using this based on what happened here. You always have to look left. So I break here. Let's look some more. Where were my buyers? They were here. I am below them. So if I know my buyers are here and we broke below, that means they're under the bus. What happened up here? Passive sellers. So if I break low and I pull back, what might I anticipate? These sellers are buyers are under the bus. Where do we come? Right here. This is order flow. Now there's more, but I'm just showing you something conceptually here. Okay. So anyway, this was a short we talked about in Trader Lab. And by the way, support is here. Opposite behavior. I won't spend any more time with this, but I want you to see it. Now, so this is a short in Trader Lab, neither here nor there. Notice the overnight low. Now on this short, right here, I'm looking at it. And now, as far as I know, let's talk about what we know. How about we don't know? I know this. Buyers are here. Sellers are here. Liquidity was here. Icebergs are buying. As far as I know, it's going to zero. How do we know? We don't know. Sellers are here. Sellers are here. Sellers are here. Now, remember what happened before. And once I do this, then I get into RTH. You're going to see how it's all the same. Random, which makes us all kind of nutty, but the same. The sellers are here. At this point, we're going to zero. And that's just hypothetical terminology. The buyers are here, which means the passive side is up here. Now, so the buyers are here, sellers are here. What happened over here? Buyers absorbed these sellers and they got run over. So when I come back to this level here, the sellers are there. You see that red bubble? The green represents absorption. This buying iceberg, which is down here, and this here, were absorbing, and they got smoked. So now you'll notice I come back to it, where the sellers overwhelm the buyer. It's resistance. You see how you might use order flow? So now we break down. Oh my goodness, going, wherever. Okay, so I've got my seller here, I got my buyer here. I'm below this seller and I'm below these buyers. Going south. Buyers are here. They can't get above this guy and the seller is here. The seller here saw this, I think, maybe, and the buyers are here and they said, oh, really? Here, have some more. Passive is here. Passive is here. Passive is here. Aggressive seller there. Sellers here. Passive buyers. Passive sellers. Consolidation. This is your consolidation. Break low. Sellers in control. Buyers run over. Sellers in control. Buyers are here. That's what creates this. I come over here. Aren't we going down? Yeah, until this. What happened here? The buyers are here. And where are the sellers? Here, here. Okay? Buyers are here. Right here, it's a suspect and the teeth start to chatter. There's your downward rotation. The sellers here took advantage of the buyers there. They were absorbed. This guy is here and here. And this might be fantasy, but it's how I read it or interpret what I see. Now, sellers are here, sellers are here, sellers are up there. That's the absorption. They were absorbed, going to zero. What happens here? The buyers are here, the buyers are here. We're going lower. We got to get under here and under this guy. We can't, right? Here, then there's trouble. Break high. What does that tell me? Let's look the other side. Too low? Too low? Don't know. Too low. Where's too high? Here, here. Break high. Trouble. Look at the change. Now what? Now I'm going to show you a little something real quick. Then I'm going to get over to the RTH. You can kind of see how now you're seeing order flow, structure, and we have the ETH low, which sets up all the statistics I gave you. So this here is a chop, chop, chop deal. And what do we call those? You guys know what these are. And I'm going to take all this off so you can kind of see what's what here. This is your consolidation. And in other words, directional and then choppity chop. What is this here? It's a consolidation. Chop, 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 break, directional. Here. Break high, resistance, break low. And then we get into this thing. Right here, you'll notice it changes. Watch the change in behavior. In here is the volume. I break high. I pull back here. If I can't get under here, I got support here. Change in behavior. Just saying. Now let's watch. Let's watch. And where do I come? I'm coming back to the top of the consolidation now. And what this creates, I didn't really mean to go into this, but I want to show you just because you could do this anywhere, as long as you know what you're looking at and you've vetted it. If this is the breakout, what happens in breakouts. I'm not a breakout trader per se, but it's what it means. That's what's important. What this says is the sellers here at this top edge got blown out. When we blow them out, the tendency, and it creates something that looks like this in the profile. This is what a consolidation looks like. It's volume. And when you leave it, it leaves something that looks like this. And this retail price, the high volume here, is too low. Now, support is there and there. Two places. You can get long here. You can get long there. And your risk is under there. Just saying. It's up to you, naturally, if it fits. Now, this is RTH open. So, but I wanted you to show you this. Now, let me get all this stuff off of here and we'll get into the RTH. And if you have questions, post them. I'll, as they say, get into it as soon as I can. Let me get back here to the RTH. I'm going to look up real quick for any questions, and then I'll continue. Hope you're getting something out of this. And please give a thumb up if you're visiting at YouTube. Okay. So, RTH open. So now let's look. Remember our targets. Overnight mid, overnight VPOC, overnight low. Pick one, right? Part of the joy. So let's look. Now, I narrated some of these in Trader Lab. I also take trades that are not necessarily structured trade, but primarily what I discuss here in the stream are structured trades that you guys, if you're interested in them, they are available in the Bookmap Discord Trader Lab community. There's no cost, and they are available to everybody. So, RTH open, here we go. So right here, we get a squeeze right off the open. Now, I'm looking for overnight mid, overnight VPOC, and also overnight low. And I'm opening right, this is the RTH open, so it could do anything here. So, and I have a short bias because there's longs in the market. So what I'm thinking is, and it can do either. I could go long first, then it doesn't matter. I just sort of go with whoever takes control. The open is a very difficult place to trade because it just is because of speed. So let's look at this. Now, my first trade was a short. I'm going to show it to you. And I don't like days like today. I don't do well in them. And it's just the nature of two-sided trade because you're always trying to figure out where's the outside edge. So like currently I'm long, and I'm sitting here in a long. And statistically, remember I read the statistics that we would take out the first hour's high and then we have 40, we have resting liquidity. So that's kind of the lay of the land, but we'll get to that one. But I got to show you these because I don't do great in these. I don't mind telling you that because there's, certain, like the day like yesterday makes up for days like today where you're just sort of getting flipped around like, I would say like a fish out of water on the dock. So here you have the buyers right at the RTH open. We have absorption. That's that little pink box. And it's have a stop sweep right here. So it's a sweep. Okay. Full session VWAP. I take that all back. Sorry, that's not accurate. That's the current. Whoops. But we have the sweep in this. This yellow line is called developing volume point of control. It resets to 0 at RTH open. And this is like your retail price. Remember, I was giving you those levels. The volume point of control is the shopping experience. But remember, we're in fractals. So the microstructure starts here. So right here, as the price and the volume start moving down, that sets up my first trade, which is a short. VPOC migration. I'm going to label this. Now, you're going to see some interesting stuff, maybe. And this is Trader Lab. Now the thing is, there's no holy grail, and it just doesn't exist. So in trading, it's really more statistics. In fact, that's the only way I think you can manage your emotional state, is knowing that if you have a plan for a certain condition, and of course the conditions change, that also presents its own challenges. But while you perceive a condition, your job is to trade the current condition, and then also be able to have a conditional narration that when that condition changes, that you actually shift to a different plan. So we have rotational plans, we have directional plans in TraderLab, and the market will morph from rotational to directional. In fact, that's what it did yesterday. It started out two-sided trade, and then it morphed into a directional trend day. This morning, we are in a balanced trade or two-sided trade, and that's hard because the way to trade this is try to find outside edges, but you don't know that until it changes. So initially, I'm looking for the ETH low, and I see a short. So my first trade is a short. Now let me show you how this works. So the first trade's here, and there's a possibility of here. Two potential shorts in the Trader Lab. Let's watch. This is called VPOC migration. I mark these, and for me, the way I look at these, and it's once again interpretive, I don't use indicators, so my thing is I try to stay in real time using order flow and participant behavior. So this is too high. This is too high because this is the shopping. Also, let's look at the order flow. Sellers are here. Sellers are up here. You notice there's no buying up here. Sellers are here. I break down. Sellers are under here. Where's my sellers? There, and here. My buyer is here. Where's my retail price? It's here. If this is too high and this is too high, south of the border. Then what? Liquidity in the book right here. I see absorption. My sellers are here. My buyers are here. VPOC migration. So far, so good. Sellers are here. If I don't get above this guy, this buyer, south of the border. Notice I'm following a process just like I showed you at the top of the stream. Now, watch. Resistance is here. Buyers tried over here. No bueno for the buyer. Sellers are here. Sellers are here. I come back up to VWAP. This is nice. I got my sellers here. My buyers are above the seller. So this suggests the rotation. I'd like to get that liquidity at 40. Sorry, guys. I got to just pay attention to something here. I'm seeing absorption right here. In the current market, I'm talking about the current market. I am going to, since I can't walk and chew gum or manage a trade, I'm just going to exit my position here. We'll continue. Okay, sorry. So the sellers are here. The buyers are up here. The sellers are here at the VWAP. This is resistance. Now let's just watch behavior. Sellers are here. Buyers are here. Sellers there. Sellers here. Sellers here. Now, here's what can happen here. If I come across, I'm going to squeeze out these swings. And my resistance is here, here, but I know the mid is here. What's at the mid? Stops. So it can, of course, can do anything. So this is important. This is important. Now, as long as I'm below all this, I'm heading south. My target is wherever it is there. So for me, I'm okay with the short. We come across here. Now, trouble in River City for the shorts. So if you're in Trader Lab and you took a short here or even here, you'd be risk neutral. Now, for this trade to fail, the real location for me is at this high volume area, right up in here. Now, it has to take out, obviously the swing high would also be failure. So right here, this is where I want it to hold. When I use the language like I want it, I want a lot of things. But I know structurally this is an important location because this price was too high. We left it and the sellers were in control. If I get buyers up here, are my sellers going to show up again? That's really what support and resistance is all about. And there is no precision. So there's my sellers. This is my location. Here's my buyers, stops, and you see the sell icebergs. That's my absorption. So I got sellers here, and I got my location there. Okay? So this is resistance. It's also another short. Or not. It's subject to your plan. So here's how you might do this. You might cover your trade here and put it back out there. Or your stop is out here because you're risk neutral. Or you didn't do anything because you're waiting for the dust to settle. You get it, and this is a trigger. Let me show you now. I'm going to take you into the minutia. And this is called mean reversion, underlining the word mean. Buyers, absorption detector is saying, and you see the iceberg. So this is to stop an iceberg. Here's another little trick. You guys all know about divergence, right? I don't use indicators, but I certainly remember divergence. What is divergence? A higher price of something, let's just say, and less of something else. So whether it's your oscillator, your RSI, but what do we have here? Stops. Stops become market orders, right? Iceberg is on the other side. Okay, that's nice to know. What do I have here? Buyers. Where were my buyers under here? Buyers are here. Buyers are there. Buyers are there. Buyers are there. Buyers are here. Why? There he is over there. And when we came down, they were absorbed. The sellers coming here were absorbed. That's the only reason this is going higher. Buyers are here. Buyers are here. But what else is here? Only 7 buy stops. What's here? 148 buy stops. Divergence. I call it stop divergence. So I've got selling icebergs, buy stops. They take the other side. Less stops, absorption icebergs. So now that tells me look for the trigger. And what else? Alignment. This is auction. So I'm taking several pieces. Order flow, icebergs, so it's all order flow related, delta, stops, volume, and location. Real estate, location. So right here is a suspect. So there's my buyers going to the moon. Except what happens? Buyers are here, buyers are here. Sellers were there, sellers are there. Where's my buyers above this guy? I don't see them, do you? Where's my buyers under here? They're over here. Where's my buyers here? They're over here. Where's my sellers here? They're over here and over there. Break low. This is a Trader Lab trigger. All these are available in the 60 PDFs. Break low, trigger. This is the micro high volume structure right there in alignment with this. This that you're seeing here is only showing you this right here. It's isolated. It's called the chart volume profile. There, this one. That's delta. So you can see the delta here. Those are the buyers, and this is the volume. And this is showing you for the whole day. So right now, this is the range, But this will fill in and show you everything. And all I'm doing with this is I'm going to isolate the auction here. Too high, trigger, resistance. Remember the store. I'm not paying that. Yeah, but it's on sale. I'm leaving. Trigger. The shoppers leave the store. Some of them like shopping here. They come back and check the retail price in this fractal. Right here. Once you see this, you'll get it. Now, I'm using this. Whoops. Always hard for me to draw. Because the buyers are here, the sellers are here. The sellers now take control. These guys are under the bus. Here's the test. This is a short in the Trader Lab. Your stop will go here, not a recommendation, of course, and the scale is here. Now you're risk neutral and your helmet's on and your stop stays here. Now let's watch. Where do we come back? Notice what was over here. The sellers are here. What happened over here? The sellers are in control under here. Buyers are now under the bus. Where do we come back? Here. Also, what else is there? Outside edge of the distribution here. See, all these are shorts in TraderLab, but you have to vet these. And of course, past performances, you know, who knows? Anyway, we're going for the ETH low. This is the target on this trade. This is a structured trade in the TraderLab. So let's look. Let's just watch it now. VPOC migration. Resistance is now here. Target. That was the end of the short for me. Well, now we're getting into my target up there at 40 and 41. Neither here nor there. I'm out of the trade. Current. I'm just talking on the current. Now, I took a long here. I'm going to show you the long. And why? Well, market is long from yesterday. We could get some early buyers, right? We got some longs in there. We rotated down. We came up. We failed to take out the opening swing high, right? And we got our selling structure. We have a statistical probability at the overnight low. Here's how this is what trade plan is about. And you always have to vet these for yourself because we're all clueless. Don't think anybody knows anything here. We only know maybe. Write that down. The best you got in this is maybe. It's about a 66% probability we would get there. But you also have to understand the market's long. And write this down. The market goes up to go down, and the market goes down to go up. Yesterday we went up. So what does that do for today? Maybe we go down to go up. So if we get shorts in the market early like this, then the possibility, and remember our statistics, you haven't forgotten those. I know you write these down. We have an 83% probability of getting to the overnight volume point of control in the overnight mid, and we have a 72% probability of getting to the settlement. And where are those located, you ask? Overnight mid, overnight VPOC is up here. We have a high probability of taking out the first hour's high, and the settlement's there, which is the target for the longs. So if you're in TraderLab, in spite of the abuse you take, because we all take abuse. Now, I was holding the short to the overnight low. I'm flat. At that point, I'm looking at this and I'm going, oh, it's going to, what goes through your head as a trader? Oh, I should have held it. Well, if you have a trade plan, you shouldn't hold it. The voice in your head that says I shoulda or I coulda, in hindsight, is Hyde. I call him Jekyll and Hyde. You know Hyde, right? The lunatic. Well, our emotions, fight and flight and all that, they're right there sitting next to us, right next to you, whispering in your ear. And all that influences you if you allow it. So, coming down, going to zero, who knows? Watch. Now we're going to go into the reversal. So, for me, out. Here, actually. I always give it a couple ticks, just in case. And then it comes down here. Now, right here, I'm saying I should have held it. Now, that's not my plan. So, that nonsense in my head, and that's all it is, noise, has nothing to do with the business that I'm in. It has to do with my emotions, which have nothing to do with this. In fact, I believe almost anyone can learn to trade if they do the work and, of course, have the capacity for it. But the emotions are a whole different animal. And that's a problem for us. Sellers are here. Buyers were here. Sellers are in control. Sellers are here. Sellers are here. Buyers are here. Who knows? Sellers are here. Buyers take a shot here. Sellers in control. We're below this buyer. Sellers are in control. We're still in control on the short side. This right here is potentially absorption. And it is actually, but you don't know if we're going to take it out. We had the sellers absorbing up here. So you have a seller absorption here, buyer absorption here. So you can kind of see resistance here. Micro, here, let me show you this. Let's go into micro. This is just a little sidebar. You know what a sidebar is, right? Chop. Auction. Break low. Too high. Right there. So this is too high. My sellers are up here. That's why we didn't go up. My sellers are below here. So on the way south. This is now resistance. Now I come down here and I do the same process, and I have high volume here. So now we're going to watch it. Just watch how this kind of fits. When I break above this, the short is done. What this is suggesting is this is too low. There's my break. Now it's a long. Here's your pullback. I got long. Here, watch the pullback. I got long in here, and then I'm going here for a scale, and I'm going for the overnight VPOC and overnight mid. So this was my target for the long from here. Posted that in TraderLab. Now, at this point, I had one more runner on. I was going for this and maybe out the top to the settlement. That's my plan. And let's look at what happens. Now, right here, we had down and now up. So at the moment, there's no reason, at least for me, others, have other plans, to think that we're not going to continue. Here's what happens. This is the retail price, remember, from the ETH. In the microstructure, this is a retail price. This is called trading in fractals. I break high, I test, I get long. This is the RTH developing retail price. Remember, multiple time frames as you think of them. And this is the ETH retail price. So what can happen is, and we don't know until hindsight, so let's not think anybody knows. What can happen is, this is a target coming up because it's the retail price. If I get through here, I got that and above. If I don't get through this, I can bounce off it. If I bounce off it, it sets up a short coming back here, and it's called mean reversion. So nobody knows that part. You only know after you know. So until you know, you don't know. Let's look. So what are we doing? Location. So for me, this was a target for the long. Feeling pretty good about it. Got the short, got the long. Doing okay. Now what? Well, look where we come. Now, this is the thing about the auction. I don't use indicators, so I'm depending on the behavior of the participants based on what the language of the market is. Indicators are fine. I got nothing against them, but they're really translators. When you go into multiple time frame, you can have one telling you long, another one telling you short. I mean, whatever. For me, I know statistics. So instead, I'm looking at the language of the market that the participants create, not my indicator. So I come up here and look right here, going. Target here, and then holding one runner. That was it. All this is in TraderLab, by the way. And then I see this, absorption. And it's like, well, we see it here, Tom. Isn't that the same thing? Yeah, it is. Except we're above it. So, fine. And what's this? Buyers are here. Buyers are under this microstructure. Look at this. There's your volume. This is like a little VPOC. So the volume is here, too low, off I go. Next little location. What's going on here? Well, if I break high, I go north. This is my target anyway. And if I break below this, then there's trouble. So let's watch in the microstructure. You notice I'm above this, and I hit this. So this is now a suspect. It's nothing, actually. Right here, I'm looking at it, and I'm going, all right, Here's my micro high volume. There. Now I'm going down into minutia. Now, in the real world of trading, I cannot react here. Because I can't tell what's going to happen. Is this buyer going to assume this, consume the seller and we continue? Or does this seller, this iceberg, and whoever else is up here, and the profit takers overcome these buyers? I mean, that's basically the question, right? So right here, too high, don't know. Right here, support, watch. See the support, break low. This is now resistance. This is resistance. This sets up either an exit or a short. Here's your test right here. Let's come back. Let me just put this line in here for you. You see the level. Remember the shopping experience. So this is too high. right there in the microstructure in alignment with this. This is the next layer that was my support right here. I break below it, I test, sell, trigger. This is resistance, that is resistance. I check this. I can sell this with a stop here. Trader Lab, are you okay with this? A pretty tight risk. What do you think? And this is your target, called mean reversion, right here. So now you're scaled. Now what? Now you sit. And either the following is going to happen. You're going to come here and come out and take the high out, or the longs in this leg are now cannon fodder. Let's watch. Remember, the short was here, the stop is here, scale is there. So when you put this trade on, subject to your plan, and you got to kind of figure that for yourself, this is called mean reversion. It's a separate trade plan. So there's no way to know. So the short's fine, the long going out the top, for all we know, that's that's it. And we're just going to go like a bullet train. And then it changes right here in alignment. And now it's back to here. What I'm showing you is the move from down here to the overnight volume point of control, which is retail in the ETH, is the same thing as the short from here back to the developing volume point of control in the developing RTH. So this to retail, retail to retail. Does that make sense? Thanks, Spoonwalker. How are we doing in YouTube, guys? Please give a thumb up if you're getting something from this. This is trading. It's sort of like what's going on, because it's always random. So when it changed here, but here's what's important about this: location, not in the middle of nowhere. So if you're a disciplined, structured trader, in other words, a plan-based trader, not a video game trader, this is where your trade would be. And you wouldn't, for me, coming up, it's a target, because I don't know what it'll do. Haven't figured out, I can't predict anything. I know when I see the reaction here that it changes things, that if I can't get above this, and it can, I might just take a short here and it just keeps going and I take a stop. Anybody here not take stops? Raise your hand. So in the meantime, if I use a structure, I'm shorting this, stop is here, and I'm going here. Now I'm risk neutral, and I'm either going to scratch and take a burger basket and fries out of here, or I'm going to come around and maybe come back. So let's look at the short. So the short comes back here, and you would scratch it out, okay? Watch. So right here is the short. This is your scale. It holds this. We come up here. Now here, you'll notice where we come, and then we react again. So this trade here, I got taken out of it, okay? Oh, it's all right. So now I'm going, we're going to the moon, right? Where's my next target? It was this, remember? So when I had this long on, this was my next target, this thing. So instead I got this. This is just life in the fast lane, and then taken out. So now let's come back to the next trade. If this was a short here at the high volume, and now I get this, isn't this the same thing? Let's look. So now, and I was discussing in Trader Lab the possibility of two-sided trade, in other words, balanced trade. So in other words, possibly come back inside and just stay in balance all day, have an inside day. Possibility. No clue. I can't predict anything. So I just think of possibilities, and then I want to be prepared. So this I know is the next level. It's the same as this, but instead of being the ETH, it's now yesterday's RTH. And there's 70%-ish probability. You have to vet those. Might not be exactly the number. Past performance, not indicative. So I come up, I got my buyers, it's going to the moon, oh my goodness. Buyers. Right here, don't know. Right here, so I got buyers and I got a sweep. Buyers, buyers, buyers. No reason to think it's not going to continue until this. Seller here. Sellers are there. Don't know. Sellers are here. Don't know. Sellers here. I'm below these buyers. That is a trigger for me. Now, let's watch. The high volume now is here. This is a distribution. I'm going to put a little box around it, just like I was doing before, so you can kind of see it. Because I'm a visual person, so I kind of handed my life off to indicators many years ago and trading systems. But I am visual. Not everybody is visual. Some are, we just have certain ways we relate to information. For me, I'm a visual person, so this works really well for me. And most of us, since we're doing charts and all that, we're visual. Here's the high volume. Now, I don't know. Remember, going up, change right here. Right here is the change. Pull back to the micro structure, which is there. Again, don't know. My volume is here. Break. I have a trigger. Buyers are trapped here. Sellers took control here. Okay. I come back inside. This is a potential short here. Stop is here or against here if you're, depending on how you want to play it. There's no precision in trading, and trying to go here. So it's the same trade, except this was the short here. This is the same trade from the same concept, and you're coming back here. You could also just come here too. It's all up to you. So this was my scale. And we come down here. Now, this is not an easy trade. I get messed up in these because it's rotational trading. So once I understand that we're not going north at this point, then it's outside in trading. It's called mean reversion. So really what we've had here is mean reversion coming back to the ETH, this mean reversion. Then back out here to the next layer, mean reversion, and then looking for it to come back down here. To where? Where's support? It was out here. So I'm looking again for it to come outside. And this is part of being clueless. Where's outside? It's out here. So what I have in my trade plan and what I discuss in Trader Lab, and I post as much as I can in Trader Lab chat during the day, is you need a specific plan for the condition that we're in. This is when you're in two-sided trade like this, you've got to have a different plan for it. You need to know what you're going to do. So you need to know that if you're short here, where the resistance is, it's here. Because this was the test. Sellers are here. We broke low. Where's resistance? Well, it's there and there. Notice where we come back. You see it? And notice where we come back. You see it? All of this is structured trading. Now, I understand when you're looking at this, your emotions are flying and you're saying, well, why not sell that? Yeah, well, you could, but where's your stop got to be? Here. So you could do that. Me? I'm patient. I'm kind of allergic to risk. I take stops all day. Hopefully not all day, but you know what I'm saying. I take stops. I get out of position. You got to get over it. I mean, I don't want to sound insensitive to your emotions, but the casinos pay the gamblers all day. And they don't get stressed over it. They just play the next hand because they have no control over the outcome. The cards are random and the gamblers' play is random. So what do? They just play the next hand. That's what we have to do. Now, I know emotionally we have a different response to that, right? So this is a short. You could sell this or this, and you're going south. Now, let's try, and this, remember, this was the scale. Now, you could be done with this here, if that's your plan. There's nothing wrong with this. I don't know about you. You can pay the rent with that if you actually have an edge for this. Now let's come down here. Now I don't know where anything is going. That's my claim to fame as clueless. Not ignorant, clueless. Now let's look at this structure. What you're seeing here is this is a distribution. It's basically your consolidation. If you come below this, which is a low volume area, you have another one, right? And then out here is what's called a low volume node. It's an outside edge. I'm going to label it for you because in the auction it speaks. Remember, language. Oh, I didn't want it. Yeah, I do. Let me put this here. And if you consider this as a language, which is the way I relate to the market, since I'm not using indicators, I'm reading order flow. And what does this mean? Why is there chop? What is a chop? Why does it even happen? It's because there's two sides involved, and they're auctioning. They're trying to figure out, well, what's what here? Here's my outside edge of this. So look up here, low volume, out here, low volume. Now down here, what happened? Now, before we get here, the low volume is here. We had volume here. That's an auction. We had volume over there. And there's little high volume structures and down here. So I know this is like the outside here. Outside, low volume. That's what I know. And I don't know anything else besides that because I don't predict. I don't know what it's going to do. I'm completely clueless. Watch. High volume is here. So right here, what do I see? Stop sweep, icebergs on the buy, and absorption right here. Micro high volume structure is here. I get my buyers above. So right here is potential support. Sellers are here. They were absorbed. Buyers are here. So this is my high volume. Let's just see what happens. Now it's a suspect, right? So I have no reference point here except for that and this. That's all I've got here. So I don't know what else. Let's watch it. Buyers are above, sellers are here. Now, here's something I always mention in TraderLab. If we had our absorption here and the buyers were here, and see the sell stops, right? There's somebody on the other side. That's what creates this. So then I know buyers are here. Now, here's the other thing you need to know. If the price comes down below here, are these buyers that like this price, are they going to go, oh, really? You're giving me another opportunity? I'm going to buy some more. I see this happen often. So if I get long, I am not going to put my stop here. I'm going to give it a couple of ticks. I'm just telling you, this is what I've found out because I can't tell you how many times, in the past, I'd take a position, maybe get long here, put my stop right at the low of the day, get taken out by 1 or 2 ticks, and then off we go. Has that happened to you? Happened to me. So I don't do that. So right here, if you got long here, and you give it a tick or two to get in, and your stop's got to be below here. Is that within your wheelhouse? Let's go a little further. So this is your trigger. This is your test. Stop is under here. Now it pulls down here. You take a stop, but it never took this low out. And now what do we see? Sellers here. So you had seller there, buyers above here, seller here. There's your sellers. Buyers are over here. We come down. Outside edge, remember, is here. So I know from an auction point of view, this is the area. I don't know anything about whether it's going to do it or not, what it's going to do. That part doesn't exist yet. We break high. If you were long here, let's say you were long here and you got stopped out. I don't know. You get this, you pull back here, it's another long or an add or nothing. And then you got a scale here and you're looking to come back here. Here. And where's our next target? We get above this, and at 9:30 Central Time, remember the IB stat, going to give you that one. 69% probability that we're going to take this out. So if I get long, which is the genesis of this whole thing, is to try to come out the top and life in the fast lane. We got to this, which is also a potential short, or we take it out. It becomes a short. We come back down across the range, mean reversion. We come outside somewhere, and if we don't completely fall out the bottom and we hold this, we come back across the range, mean reversion. This is the mean, yellow line. And then this probability being at 69%, we want to be long, which was the last trade I was on. And then the target is settlement. That's it. And, you know, and this maybe, but that for me, this was my last trade. And as you guys know, because I mentioned that to you in the stream. And that's, let's see now. I haven't seen any of this. Let's see what we got. Do you guys have any questions? Well, where are we? Settlement. See, that's the target. Now, what does this do? This sets up a short also. All we're doing here is trading in the rotations. Before I go into this, and I'm just doing the same process, guys. Questions? Yeah, FERS I see. FERS is in the Trader Lab. Now, there is a statistic to take out either the previous day's high or low. It's about 85% probability. We actually have a 85% probability to take this out. However, yesterday was a trend day, and often, doesn't mean we have to, after trend days, the market consolidates. So that's why I was looking for potentially an inside day. But considering where we are and that we're above this, we might get there. It's not my job. You know, it just isn't my job to predict because I can't. So I don't try to. I just go with the flow. So the flow is rotational. The stats, this has a high probability. So, but it doesn't mean anything, depending how you look at it. Because this is, again, coming down to fractals and time frames. Some traders in the Trader Lab are going to have a trade on, and they're going to say, well, what are the odds of taking out yesterday's low or yesterday's high? Well, 85% probability we take one of them. I think I'm going to go for the high, which may or may not happen, right? Randomness. So you could be long and not be fiddling with all this stuff, these rotations, which as a day trader is kind of what I do, and just hanging out and saying I got 85% probability. Well, it's not 100%. And you're just saying we could take this out. I don't know. So I don't try to predict anything. I do try to align. So here we are, next target. And you guys remember I mentioned there was liquidity resting at 40, which was sitting over here. So I was actually targeting 40 ahead of the settlement. That was for the long I was on. And because I was streaming, I said, I got to get out of this thing. I don't want to be distracted. So we come up, we tag the settlement. And remember, the settlement price had about a 70%. Oh, wait a minute. I lose these things here. 72% probability. So, okay, you know. So let's look at the short now. I don't see any questions. So, by the way, if you're in YouTube, please give a thumb up, a like, I think they call that. I hope you like this. There is a link in the bottom of YouTube if you're interested in the Bookmap Discord Trader Lab community. There is no cost. I believe anybody can learn to trade if they do the work. And part of having a community is to leverage the work. There is a lot of work. Now, what is work? Work is building trade plans and spending the time to do the research to know where your trades show up. And it's not my trade, it's your trade. Because I might operate in a fractal, you know, looking for a short, let's say, to come here or down to here. Others may just be sitting long and go to the gym and do a workout. We have traders who do that in Trader Lab. We have other traders that are kind of scalpy oriented, not too many, but they're in there. They trade short term. I used to be a high volume trader. I now trade more for the swings. It's all about risk reward. It's not about an adrenaline or dopamine fix. It's about what pays. That's what trade plan is about. It's not the last trade. And there's an illusion, I think, for many retail traders that it's, quote, easier to have a closer target. It's about win rate, not yield. This business is about win rate. By the way, this right here, we have a couple other trades here in the Trader Lab. I'm going to have to tell you about them. You got to pay attention. Let's come back here. So right here, we get our target, and we have that micro high volume structure. You guys have seen this all before. So right here, I have my buyers. Right here, I have a sweep. I'm seeing my icebergs up here, and I see absorption. My seller is here. This here is the high volume right here. So what do I have? Support is here. Resistance is here. Right here is microstructure. My seller is here. Support is here. I come up here. I exceed this. I'm over this. Now the buyers are here. The buyers are here. The sellers are here. The buyers are here. The sellers are here. The buyers are here. The buyers are here. The buyers are here. Sellers are there. Change. Now, sellers are here. Now, this is the following. That depending where you're headed, you can use these a couple different ways. And this is what I do and traders in Trader Lab do. It's all individual. When you find your groove, you could use this as an exit. You could use it as a short. And it's a potential mean reversion. Now, you're going to find this interesting. So this is a potential short. So remember, trade management or exit. Where to? This and this. What is this? We have two trades in the Trader Lab. One is called the IB continuation trade, and it happens right here. There's the IB. And what is this? Outside edge. What else is this? Low volume node. You do remember what was down here? Outside edge. What is it? Low volume node. What's this? Same. And what's it in alignment with? This. And what am I above? That. This is the highest or retail price from yesterday's RTH. Remember? If it becomes too low because I'm above it, I can use it in alignment with something called the IB continuation trade in alignment with the low volume node, which is there. This is trading in fractals. And what these are called are distributions. And really what they are consolidations. That's what it is. So let's look at this. Outside edge. Let's look at the trigger. Now, there's a couple pieces, more pieces. You'll go, oh, really? Yeah, really. Where's resistance? There. You see what happened here? Same thing in fractal. Buyers, sellers. Sellers below the buyers, micro high volume structure here. Sellers down to the IB, above this low volume area. Buyers take control. Let's look right here. Micro high volume is over here. Now you have a choice. You can wait because this is resistance, or you get right in, you tuck yourself right here. Let's watch this. The buyers are here. The buyers are here. The resistance is there. That's where the sellers are. And we'll see. This is not a trade recommendation. We all take stops. The casinos pay to gamblers. It's just the way it is. There is no holy grail. Or if there is, you're keeping it a secret and you haven't told me about it yet. Let's watch the structure because that's what we got. What is this? Participant behavior. What is this? A structured trade in the Trader Lab. Location, location, location. This is real estate of trading. Where were the sellers? Here. So now you got a sandbox. Resistance. Unfortunately, we tagged it. And now support. So one side, of course, is going to win out. Let's see. We do have yesterday's high. And we're going in the lunchtime. Volume tends to, used to be, back in the days on the floor, we'd all go to lunch. And there's a place called Brokers. It's no longer there, but it was right out down the street from the Board of Trade. And everybody would go. We'd all go. And there were a lot of guys who would go to lunch and have cocktails, which I never thought was a good idea. Let's watch the behavior. Now remember, if this is mean reversion, we can come back here. So this is where your support area is right here. So we have identified where the buyers are, and we've identified where the sellers are. So now we are looking to see what happens here. If we just keep going, then this here, we got nothing going on here. Let's just watch here. If you get below here, then, this is your area. Nope, going south. This is your out. See, all this here is your areas. So that's why one of the things that's so difficult about this is there's no precision. So if I took along here, I'd take a quick stop. It's okay with me because I have to be okay with it. Now, what happened here? I took stops. I got iceberg. I have structure. I'm at a location. I'm still in my area. So I want to see what happens now. We can come back. Let's just see. Remember, high volume now is sitting here. Nothing to do. So this is what we call your mean reversion. Yeah, CMJ, that was not nice. So for me, I would be taking a stop, and that would be that. So now I have nothing here because of this, and then I have to see what resolves here. This is when, if you have a stop here, you get skidded. Adds to the unpleasant experience of it. So now this is where we're potentially going to go. And we're back in mean reversion. So we got, what's interesting about it is, our resistance. Break. Now there was no way here to get short for this, unless you were already short. But this is a structured trade here. You see, remember this? This is the long. And that's the resistance. So there's not a lot of range to this thing, You could take the long here to there. Once you come under here, then you're really, if it's going to hold, it's got to hold this. Because this is where the buyers were. And they got thrown under the bus. So we come back to VWAP, mid, and now this is resistance. The low volume node up here, and here is the resistance coming back this way. Gonna get rid of some of these. This is the area that potentially it's going to come to. So this is, we fell out of this distribution. This is now resistance. This IB is resistance. This is resistance. This is potential short, but you only got this. And the stops here. Now, the other part of this is we can anticipate mechanical buyers at the mid and the VWAP. Not saying they're not going to be right. It's not about that. It's about retail trader behavior. We know this is now resistance, and we know we can get buyers here, and we can counter rotate up. If we can't get above here, these stops that are under here are going to get taken, and then we come here, and then we're back into this rotational thing again. So we've changed. We'll see what it does. So, you know, for me, if I get long in here, that's my resistance. We know that. If it comes back here and I hold this, which we didn't, then it's and even here is a potential long, and look where we went. Here. And then we have to clear this to get to this. It's kind of sequential as far as a fractal goes. Here, we didn't get over this. That sets up potentially to come back here. We got to get below this. So now this is next. Then it's what happens to the longs who are sitting in here. Now they go under the bus again. We're back in, this is called mean reversion. And now it's trade management. How far out do we come again? Is everybody tracking? This is not a thrilling experience. This is just trading, you know. Called mean reversion. Underline the term mean. How are we doing in YouTube? This is the Trader Lab, and this is trading in fractals using Bookmap for order flow, looking inside participant behavior, attempting to get an alignment with the participant behavior as is reflected in structured trading in fractals using the volume profile as a chassis. So what this is here is the mean. Where to go? Let me get that mean back here. This. So on the shorts, this is where you're trying to go. Then the possibility is to come back underneath. Because now we're back. We went from directional down, directional up, directional down, directional up, and now back directional down. So it's still two-sided trade. And we have two trades. Remember, I was talking about them. I don't know if I mentioned them here in the stream, but I was talking about on Trader Lab that we have range extension. So the upside had the better stats overall. If we came back inside, it's called the IBF. So there's two trades here. One was a long, lost it here, back here, off of here toward, the test higher and maybe get back to yesterday's high. And if we fell back inside, which is this, sets up what's called the IBF, which is a mean reversion trade there. Okay. And then if we come under here, just, rotates under or whatever. But mean reversion, remember, this is the mean. So what we're doing is the longs, so the short from the overnight volume point of control was a reversion trade. When we came up here, the short out of here was a reversion trade. When we come outside and we come back inside, it's a reversion trade. And once we're back under here, then it's back to this one. I know it's confusing. That's why you got to come to Trader Lab so you can understand what's going on. And the thing is, we won't know, like anybody else, until hindsight that the condition has changed. So this long is okay until here, which is why if you took it and you have to have an entry for it, you got to scale there. That's what I know. I don't know if we're going to get through it. I don't know if we're only going to rotate and then take it out. You know what I'm saying? That part we don't know. When I break under here and I pull back here, now there was no way into this, at least for me, because of this, because if we would have held here and gotten over here, then back there, but instead we didn't. Instead, we pull back here. This could be a short to there, mean reversion. Then you're holding. And either we're going to come back and take this out and that, or we're going to rotate down the other side. That's structured trades. And what it does, it's not our job to predict because we can't. Our job is to have this all laid out, and then when the market or the participant behavior reveals itself, then you can participate if it's in your trade plan, which is, here to there. And then it's going to be, this is your resistance. Remember, this was the last place that's too high. It can come all the way back here and squeeze, can do anything. But this is the mean. So that was your reversion. Now what we have to see is what happens here. Do we get sellers? Where do they come back in? There were sellers here, and there's also stops right over these swings. So we want to see if we take the stops here, do we get our sellers and our icebergs, and are those buyers, the stops, absorbed? There's the absorption. Now we want to observe and see what happens here. And our resistance is here. And whatever happens, happens. Right? So let's watch. Any questions, guys? I got about 7-8 minutes. That's about it. If you're interested in what you see here, I mean, it is what it is. You can learn this, and you can take pieces of it. You don't need to be trading like a whirling dervish. Imagine if you could vet a trade that has a high probability of success over a large random sample of outcomes, just like the casinos play their games. Would you trade that? If you could develop metrics so you actually knew it had a statistical edge that's tangible versus your emotional stimulus that says, should I sell it? Should I buy it? Should I bail out? All that. If you had a plan, does that give you a better ability? Because statistics and metrics are tangible. You can touch them. That helps you manage the fear, which we all have, the fear of loss, the fear of leaving profit on the table, the fear of missing out, all that. The fear of taking a stop because your last trade took a stop. Does this sound familiar? How do you manage that? Well, that's what TraderLab is about. TraderLab is about helping you build out a plan that will give you a statistical edge. It's not one trade, it's all of them. And then whatever happens, happens. It's just like the casinos. Now, this is important. This is called VPOC migration. This is now the retail price. Now, two things can happen here. We can continue higher to take this out or test it, or we can push off from this and come back here. That's what I know. But remember, any shorts, this was the target. So now we have to watch. We're pushing off. Resistance is here. So this trade right here could be over because it's violating a structure. Final questions, guys. Please give a thumb up if you're in YouTube or a like. There's a link down there if you're interested in the TraderLab. Remember, resistance is sitting here. Now, this is all subject to how you, if I know sellers are here and I'm above them, I might want to be out of this trade, don't you think? What do you think? It's all subject to time frame and trade plan, not what the market will do. We cannot predict what the market will do. Sellers were here. Sellers were here. We are holding this. We're above these sellers that are here. So chances are here. And I say chances, that means maybe. Doesn't mean anything more than that. If I come below here, I'm back here. So nothing more to do. Anyway, thumb up. If you're interested in visiting TraderLab, there's a link in the bottom of YouTube. You do need to confirm your email address. If you would like to get a no-cost version of Bookmap, there's a web-based version you can download for free. Go to bookmap.com. You would then become a subscriber. No cost. You would be a subscriber. It comes with data, and you could play with it a little bit, kind of see just what's going on. watch the education. And if you're a subscriber, you also get access to the Bookmap Academy. The Bookmap Academy, there's coaching, mentoring, and reviews by other traders. And it's about how we all collectively get better together. There's also additional education on stocks, options, crypto, of course, futures, order flow with a high-tier tool like Bookmap, market maker behavior, and a lot more. All of this is available, and there is no cost. But you do need to confirm your email. Notice what we had here. More microstructure, a break, test, and rotation. I don't try to operate in all of this. I try to go for a broader stroke. So like something like this from here to here. That's my trade. This thing, if I'm short and it takes this out, I can exit the trade and not think about it. If I see this and I break low, if my plan says so, I can put the trade right back on again. I don't have a problem with that either, but that's individual. The stop would be here and you're coming back here. It's still the mean. And this is called a variable high volume node. Shopping, remember? Oh, maybe that's too high. In the fractal, that's too high. Right there. Chop, chop, chop. Sellers here. Trigger, Trader Lab. There's 60 PDFs. Pull back to the right here. See it? Right here is your entry. Your stop is here, and you're trying to go here. If that's in your plan. I'm not saying it should be. I'm just saying this is how you read it. Then you determine the range and the fractal and the slop that you want to operate in. Because by the time mere mortals execute, this thing would be over here. You'd be in here, your stop would be here, and you'd have to get risk neutral so your stop could stay here. So the range from entry to failure is risk neutral. And then you're either going to scratch the trade or take a full stop if you don't get your scale, and you're going for this. If we get below here, you're coming down there. That's it. That's one trade. If this is your time frame. For me, the better trade is this to this. You see, it's just more range. Anyway, thumb up, please, on the way out. Let me just show you very quickly what these PDFs look like. If you haven't seen them, they are available in the Trader Lab. Just click the link in the bottom of YouTube. You'll have access to these. You can download. There's 60 of them. Circles, arrows, descriptions. Some are screenshots. Others are live trades. I'm not a vendor. There's no cost for this. None of this is mechanical. It has to be overlaid on the actual condition of the market. And you can learn that in Trader Lab if you come in, roll your sleeves up and say, what do I need to do to potentially have an opportunity to create a career in this business? That's Trader Lab. Also, there's a library of webinars and, of course, all the additional education that the Bookmap provides at no cost. Thanks, guys. Thumb up. Look forward to seeing you tomorrow. Trade safe. And if you don't have a plan, it might help to get one. Thanks again.